Alright, hi friends. It's been a while since I made any videos about the market updates in general regarding DeFi and financial markets. So in this one, I will go through some of my opinions, some of my ideas. DeFi market in general is actually pretty good, even though the TVLs, the money across different chains are not the greatest, and we are seeing mostly outflows out of different protocols and chains, but the yields been really good. If we check one of my positions on ETH, as you can see, this is the ETH versus USDC on base and on Uniswap. This position with 11% range is generating approximately 0.74% per day, which would equal to about 5% weekly and about 270 in a year. Even though these numbers are not entirely correct, and in most cases you are getting less than that, and I would say about 1.5 times less than that. So the reality for the daily generated yield from fees is closer to 0.5%. So it's still really good knowing that 11% opposition with this range, as you can see, 2691 and pretty much 3K is an okay range. It's a bit more narrow, but because these conditions right now are actually, well, the market is kind of either totally dead or slightly more volatile, but that volatility is within 10% a window. So this range makes sense for me in a short-term perspective. It's definitely not for a long-term yielding, but under these conditions, I am able to generate multiple percents. Last week I generated it's actually Friday, so we could say and the week I generated about 3.7%, and the prior week I generated 7.4% in a week through 3 positions, which is this one, ETH USDC, also Solana USDC on Orca, and Sui USDC on Turbos. Okay, managed to generate that. So actually, if we go to the DeFi Llama and we check the chain's performance, as you can see, if we look at the 7 days and a monthly TVL change, Solana is actually gaining, and most of these money comes from stablecoins and a bit of an increase in Pump decentralized exchange, a bit of a more volume, a bit more money, meme coins trading, leveraged trading, etc, etc. So this is a pretty good sign. If we open up Solana chart, if we zoom in purely on TVL, as you can see that it's been, well, mostly flat, but after a tiny bit of dip, we are seeing a bit of a comeback, okay? A bit of a comeback, plus 6% in the last 24 hours. You can see all the data here and all the info here. So the TVL came a bit to Camino, a bit to a project Zero, and it's of course weighted. So, and yeah, Solstice is not that great, but well, I don't look at the specifics too much, especially not on DeFi Llama. It's not the best, but just to see the general numbers, we can see that Solana is gaining in TVL while most of the chains is losing. And also one worrying factor for me is the Sui. Sui TVL is now below 1 billion. It is losing a lot of money and is actually slowly dying. I wouldn't say that this is a problem yet to fully exit Sui positions and just forget about it and just, well, recover the impermanent loss from Sui coin if you have any. I bought Sui at about $1, so I'm still kinda coming close to break even, but this chart, this is not beautiful. If we zoom in since 2025, more or less. This is not beautiful. We've been above 2.5 billion in TVL on SUI, and from here on it was just a massive downfall that is continuing to happen. Money is flowing out of SUI, and to be honest, if you check the chain fees and revenue, it's not that great. It's definitely not that great. Most of the fees are paid by the SUI land. In most cases, this happens when you see that most of the fees from the block from the chain revenue comes from the lending or borrowing protocols. It could mean that they paid a bunch of fees because of liquidations that needed to happen, and their liquidation systems and bots automatically triggered multiple liquidation events, and that's why there was lots of transactions and fees paid. So this is, well, basically not a good sign. You usually want to see fees being paid by the DEXs. So, and the DEX is, yeah, C2 paid only 37k, turbos 7k only. So it's not a good sign. It's still yielding pretty good. You're still I'm still managing to make up approximately 0.2, 0.3% daily easily on SUI with a pretty wide range of about 15 to 20%. It's not that bad, but the SUI itself, if you entered into SUI recently, a month, 2 months, 3 months ago, you definitely bought SUI at a pretty high prices. And at the moment, it is not looking good for SUI as a chain. Nobody is interested in that. Liquidity is dry in the market, and it's just these kind of chains that are, well, I'm just here, but I don't have a very big use case at the moment. The SUI gaming thing didn't work, so it's just, it's here, but I don't see it recovering that heavily. I might be wrong, and hopefully I am, but from all the data I see, from all the social narratives I see, it is pretty tough for SUI. But at the moment, it's still yieldable, and you can yield a pretty good amounts of fees only, without incalculating impermanent loss. If you bought SUI before, then you have to turn on the grinder strategy that I teach in the DeFi house, and basically grind up from the fees purely with very small ranges. Okay, well, then the base chain is okay-ish. It's a positive number, barely positive number on a monthly change, but a bit of outflows over the last day and week, which makes sense. The market is super fragile. Binance Smart Chain, that's a BS. It's just a bullshit chain. I don't see it as a valuable DeFi, as a worthy chain to yield on. And I don't like Binance, anything related to Binance in general. So yeah, whatever. Avalanche, even though it is seeing a bit of outflows and not the heaviest, but pretty heavy, it's still a pretty active chain. The volumes are not that bad, to be honest. As you can see, DEX's volumes are about 300 mil a 24-hour, which is pretty good. 7 days, 1 bill, and the weekly change is about 3% in positive. And most of this money is coming from the RBAs, real world asset tokenization stuff, and it's basically a fairly active stuff. As you can see from DEX volumes, it's kinda recently, last few days, it's kinda a bit more above the average. And the good thing that most of the fees are coming from the actual DEX, which is LFJ, then from Aave, and then the rest of the DEXs. Black Hole is a DEX as well, so it's not that bad. Yeah, and Aave paid most of the fees yesterday throughout 24 hours, mostly because of the liquidations as well. Okay, so these are a quick brief overview of the chain. The Flare one is kinda difficult. FXRP yields are not the greatest as well at the moment. People are really not interested in that. I mean, everyone is just trying to survive right now rather than thrive. So it's a bit of a, these kind of chains with FXRP is not the easiest to yield on. Even though the TVL, we had a bit of an increase, of course, once the whole hype began about the FXRP, etc. And basically we've been here slightly increasing. Well, we had a median average of about 140 mil here, and now we saw an average of about 190, and now we are a bit on decrease, but that's not too bad, to be honest. It's holding up pretty well. Okay, now let's go back to, oh, by the way, so this position is yielding 0.75, reality is about 0.5%. Solana with about 11% range as well is yielding approximately 0.7, and it's pretty accurate. And SUI at the moment is yielding approximately 0.34, 3.4 to 3.7, up to 0.4% per day with about 15% range, which is not the most widest. On ETH, it would be pretty wide based on ETH volatility, but on SUI is just pretty much daily movement at this point. Now, if we go back to the charts, okay, I want to hide that. That's my private tool. I need to have some edge, right? And not all the tools are available to the public that I've developed myself. Anyway, let's go through some of the charts, some of more interesting charts. BTC chart in general is not that interesting. What I have on my chart with the red lines, I will not tell you specifically, but this is related to some esoterics. I know it may sound a bit weird, it may sound stupid to some, but there are specific times throughout the month where specific events needs to align and happen, which leads to, in most cases, I would say from my about 6 years of backtesting, approximately 74% probability to be right. In this case, when the time aligns, the market tends to be a bit more bearish. So if we look through the systems, the way I made it is the light reddish area, the light one, is the day before those events, and then it actually happens. So the day before, on these days, you are looking at the expected sell-offs over the upcoming few days up to a week or so. And if you take a look at all of these conditions, well, once these events starts to align, the market tend to become bearish. Here we had a massively good example. Here we had a bit of a smaller one. Here we have an actually not the greatest one, where the market actually did the opposite. And 2 days ago, this event started again, and we are seeing all of this bearishness at the moment. Here, day before, we had the drop. Here we had the drop, we had the drop, we had the drop. Here actually the opposite happened. Here we had the drop. Here actually the opposite happened. Here we had a bit of a drop, and then the market reversed. But the event itself, here we had a drop. The event itself is not from one area to another one. It's not working like that. It's actually just a few day period. So whatever happened here, it's not related to this tool, okay? Anyway, this is a bit of my proprietary, whatever the hell it's called, toolbox that I'm using myself to yield, to use, to trade, and to predict the market in a better way than the most retail people will ever be. And also I have some clusters, EMA clusters, specific numbers. This one is the easy one, the pretty standard one is the 100 moving average. These three are very specific numbers that I've been backtesting as well for multiple years, and I see them working as a very profitable dynamic areas of medium to short, medium, and medium to longer term resistance or support areas. I do not believe in technical analysis charts making different, oh, this is support because the market rejected multiple times. For me, this may be a support. Maybe you will say, well, actually, this is a support level. So who is right now? If the market is reacting from your level, but not from mine, you will say, oh, I was right here, but if I don't have this line and I have this line only, then I will say, oh, look, but mine support level or whatever rejected perfectly, right? Others, they tend to mark it on a linear chart. On a linear chart, the best area would be probably about this one, and then probably something like this one as well. And if you look on the candles, you have a pretty nice touching points and reactions, but I don't believe in that stuff. It's just, for me, in my personal opinion, this is a noise to convince yourself that there is something happening on the chart that you understand, but it's definitely not the actual systems and the actual stuff of what's happening on the charts. To do that and to predict and analyze the markets, the price action, you need to have a pretty constant tools that are not changed on the views and opinions of multiple retail minds. So BTC is dropping down since yesterday. We have all the fundamental narratives of why. US Iran stuff, we have liquidation events, Binance, blah blah blah. There are hundreds of people to blame for, but this was expected. This was expected, and not because of some sort of a news-driven data, but because of specific events using certain esoterical stuff of why the market was in favor to go down. Okay, I will tell it this way. So there is nothing surprising for me here, to be honest, and we are now sitting fairly below the EMA's clusters. Once we have a pretty wide gap, and at the moment the gap from the mid area is approximately 7%, which is a pretty big anomaly, we tend to slow down, let the EMAs catch up, and then project and go for another move. So for example, here, once the same thing happened, we've been for a while, and as you can see, we had a pretty big gaps through all of this drop. Then the market remained calm for a few days, let the EMAs catch up, and then we saw a break, comeback, and continuation, but we failed to break the major area, which is the 100 moving average in this case. So at the moment we failed to do this, we came back down below, and then it aligned with the expected possible bearish price action for the upcoming few days, up to a week or 1.5 weeks. So this is exactly what's happening right now, and I believe we will see either a bit more of a drop or a bit of a comeback, consolidation. The EMAs will catch up, everything will relax, and then we will have another decisive move, whether to the upside or downside. I don't know, I can't predict that, but historically tend to, if I show you a slightly, what we are having is the recommended action to accumulate under these conditions based on many calculating factors, and historical average on these kind of conditions is approximately 40% over the 30 weeks period. Okay, so well, 40% from these prices wouldn't be the craziest stuff. This would give us at approximately 125 or so, yeah, 115, sorry. So it does make sense in a way. So let's see. I don't think we have to analyze ETH or anything else. This is not my position. This is we just yesterday had some fun in the office betting what would you hold for the 2 weeks, silver or ETH, and I just added as a point of reference where the bet was made. So it's just here for the next 2 weeks, and I'm gonna delete that. Okay. Anyway, let me quickly hide some of the tools because we don't need all of them. And this tool that I have works on a major market assets like BTC in this case. So let me hide it quickly and then we will go through some other charts. Okay, we have this thing hidden, and now let's go to the total 3S chart. Let's go to the we can try from the weekly. So the total 3S is the actual chart that you have to watch, and it's not some sort of a BS. Like the majority of Twitter shows you the total free chart, which includes the stable coins, and everyone saw and said that the market is making a new highs and the alt season is here, blah blah blah. None of this was true, because the actual chart that you have to be looking is total 3S, excluding BTC, ETH, and stablecoins. And as you can see, this recent whole push high whatever was actually not even close to the previous highs, and the alt season was not even in the horizon, while everyone screamed that the alt season is here. What we are seeing right now is actually a fairly consolidated price action. All of this area, you could technically draw a bit of rectangle like that and see that in most cases since 2024, this area was the area where the market just spent most of its time. In a way, this area may be a little bit wider, more like that, but it's just, well, we had some anomalies pushing higher, coming back, but most of the time we are spending within this average area on the total 3S. So we are sitting at 522 bill versus 2.8 trillion in total market cap, including BTC, ETH, and stables. So this is a pure altcoin chart, and the pure altcoin chart is not looking neither bullish or bearish. We are just at a pretty fair value area, fairly priced area, because it's back where it's been since 2024 pretty much. So 2 years average price would be approximately somewhere here. So I wouldn't say that we are either bearish or bullish in this case. Stablecoin dominance, USDT plus USDC. This is another mistake that most people are making, watching only USDT chart and saying that, oh look, USDT dominance, whatever, people or money is flowing into your stables. But you have to look at combined, because USDC is now as big of a player as USDT. On base chain, on Solana, most transactions are happening through USDC, and there are hundreds of millions of volume every single day going through USDC, and it's just increasing. So you have to monitor the combination USDT and USDC in this case. And we are sitting at 9% dominance on this chart, which tells us a pretty clear story that we have a lot of money sitting in stables. Most of it is probably through the selling that's been happening. If we look at the recent chart, what we had right here, a massive increase. So it's the opposite correlation to BTC. So Bitcoin and the whole market went down while stablecoin dominance went up. So money was flowing not fully out of crypto, but mostly out of assets into stablecoins rather than somewhere else. Because if you have a crypto market dropping massively and USDT and USDC dominance chart remains kind of flat, it tells you a different story, that money is actually flowing out of crypto in general rather than just staying momentarily to and add stable coins. Okay, so the money is mostly parked at the moment. There is not a massive difference since here. So most of that dominance remains similar, meaning that yes, the market is doing all sorts of things, but most of the money recently that happened and was accumulated in stablecoins since, well, August of last year still remains in stablecoins, and there is no massive changes or rotations into assets or out of assets. It's just kind of flat. So if you look at this, you will see that easily. This is the box, right? And the box width is approximately 13%. So from 9.4% to approximately 8.2%. And if you check the same time period, which is November 17 on BTC, you will see that November 17, which is pretty much this one, that the market been kind of flat as well over that period of time. So the stable coins are parked. It's not going to BTC, it's not going to alts as well. As you can see here, it's clearly visible. It's just pretty much parked. ETH BTC chart, well, ETH was outperforming BTC for a while, and now the BTC is outperforming ETH again, and the recent weeks it's been mostly just flat. If you open up daily, you will see that this is just a noise. On a linear chart, it looks like a fairly stable heartbeat chart, right? Cardiograph, whatever it's called, right? So it's alive, but it's definitely not under stress, or it's not hyperventilating or whatever. So it's not too bad. The patient is okay. So once the ETH and BTC ratio is like that, it means that in most cases it's just a very, very, very neutral market conditions. And this is exactly what we are seeing. Dollar index, this shit is going down massively. I have no idea why I have this weird channel on my chart. Maybe I was showing it to someone. But we had a massive decline from the DXY index since the medium of 100. It is losing value at the moment, and it's a good thing for risk on assets, and I believe that's the goal. But because crypto is so highly manipulated, it's gonna bleed first. Net liquidity from the Fed, and this data is also a custom made chart. Okay, it's better to look this as a weekly perspective. We don't need any EMAs here, but as you can see, net liquidity, we saw a bit of a push. Everyone was screaming that Fed is gonna do the QA, it's gonna buy up the assets, blah blah blah. It's the biggest bull market in history is here. Actually, it's even, the net liquidity is actually even lower than it used to be. We saw some inputs, that's correct, to the overnight repos, okay, things, but the general net liquidity is on a drawdown, right? It is going down, not by much, but definitely this is not a QA people think about, and it's not money printing, buying all the treasuries and the assets from the Fed. It's actually kind of more neutral stance from their perspective. And the last few days, there were no overnight repo purchases, there were no injections, anything. And I'm not saying that the QA will not happen. It will need to happen, but I believe the Powell wants to exit his term in a clean state, because things will get messy. Risk on assets, all the assets, you must own the assets rather than holding money, which is fake anyway. But at the moment, I look at the data and not at some sort of a weird crypto Twitter narratives. The liquidity is not here. There is no money in the markets, so to speak. So this is why it's so easily manipulated. Okay, M2 supply. Well, it's a pretty simple chart. It's up only. This is the up only chart. Let me quickly hide the EMAs. Okay, as you can see, it is up only chart. We had some issues in 2022 where nobody was printing money, but now it's up only. Okay, and I believe this will continue to happen. S&P, from the weekly perspective, what's this? From the weekly perspective, it's neutral to bullish price action. I'm not gonna analyze this in depth because I'm not doing that. I have my tools. They tell me all the sentiment, all the phases, and all of my calculations. I calculate endless amount of things from the Fed and from the global financial markets and summarize it all into one score, 0 to 1. So at the moment, we are sitting at a mild risk-on conditions where you are able to buy the dips safely, but we are not expecting and we are not suggesting any kind of leveraged or high beta place in the equities market so far. Okay. Gold and silver. Well, silver is absolutely insane, but I told about silver in 2021 that I'm heavily accumulating it, both physical and through exchanges, ETCs, exchange traded commodities. It was the biggest short squeeze ever, and once the liquidity is drying up in the markets, the short squeeze and the manipulation cannot hold up, and that's why silver is exploding massively to the upside, and I don't think it's gonna stop anytime soon. Yes, we will have healthy corrections. It makes sense. Whatever happened yesterday does not make sense at all, because from the silver and gold market there was approximately 1 point something trillion in liquidations. Most of it came because of leverage, of course, but still, I mean, these kind of money should not be that, and these kind of assets should not be that easily manipulated, right? But because we have an insane run, once again, look at that, 30% run versus more or less 6% pullback. It totally makes sense, right? And it's a pretty healthy stuff. We have also copper, which in my opinion is a pretty big bet moving forward in life. And over the upcoming few years, the demand should explode because of the AI and industrial technologies. Okay. Russell 2000, we have to look from the weekly perspective, linear chart more or less. It's made a new all-time high recently. A bit of a pullback so far. Will the altcoins follow? We will see. In most cases, when the Russell is making the all-time highs, it means that the market is kind of risk on. It's not necessarily mean that you have to go fully blast on and have fun, but this signifies the idea that, well, we are on a kind of risk-on environment, and people, investors, equity traders, and investors are happy to execute into riskier and higher beta assets as well. Okay, anything else that I want to show you? I want to show you one more chart. Let me quickly open this up because I have to go to my private macro watch list, which is super private. So let me quickly go through that. Okay, this is the chart. This is the copper versus gold ratio. Once copper is outperforming the gold market, it is considered as a risk-on environment, and the industrial sector and everything is working as expected and is thriving, and there are buildings being built and things being made. And when copper is outperforming gold, in most cases you're seeing a risk-on environment. In this case, it is not the case, and the gold is outperforming, well, pretty much anything anyways. But based on these current charts, as you can see, we are seeing a bit of a copper being outperformed by gold, meaning that we are leaning towards mild risk on to neutral to kind of very slow and very tiny mild risk off environment moving forward. Okay, it does not mean that the risk off environment is here, but throughout the whole calculations and math, this holds some weight into the calculations, because historically throughout all of the backtesting and stuff, this tends to hold up some value. When copper is outperforming or underperforming gold, it kind of nicely suggests the current environment that we are in. And in this case, we are not super into highly risk-on environment, okay? Which the macro score of mine actually confirms as a mild risk on, where you are able to buy the dip. So if S&P dips, you could buy that thing, buy the dip, so to speak, on equities pretty safely, but you shouldn't expect any explosive moves to the upside, and you should be kinda slightly cautious, okay? So this is the market update from my side. It's a pretty long one, but I believe you deserved, guys, a longer update. We are working extremely hard with the new platforms, new projects that, I mean, most of the data will be released. We will not tell you how it happens. I will not give up my calculations, but I will give you the scores moving forward. But yeah, it's absolutely mind-bending stuff and life-changing stuff, to be honest. These tools, we back-tested them through multiple cycles, and a lot of adjustments have been made. But what we managed to develop, I mean, all of my formulas, everything, is it's really something, okay? And I believe that once we release it, once people will be able to see that, use it for their own confidence, the goal is to make you confident in the markets, in the current system, okay? And prepare you for the upcoming system using DeFi, etc. So it's a bit of a big plan. Most people will just go through some charts, give you some moving averages, and tell you to buy here, sell here, or give you even worse signals of some kind, but you will not have the confidence. Using the tools that, well, I'm using myself on a daily basis, you will have the confidence. You will have the confidence on what kind of conditions and market regimes you are in. So it's a pretty big deal, and I've been working extremely hard to make it happen. Also, let me quickly check one of the tools that I released to the DeFi house, which is the short-term yields. 1 second. Okay, I just added the tool. Yeah, because this tool is absolutely incredible. I've been using this myself. I've developed it myself. And this is a short-term yielding where basically DeFi house members know how to use it. There is a whole video and a link to this tool so you can apply it. But once the market is not trending, like here, for example, or here recently, based on some calculations using historical volumes and betas and everything, it tries to find a short-term range for you to stay in for multiple hours, but this will be a short-term range on the liquidity pools. On Orca, in this case, this is a Solana. We have ETH across Arbitrum, Base, ERC20, etc. Also some farms. And basically, once you see the mint box being drawn, you are actually executing to this range, 125.11 to 122.8, which is a very narrow range, which will give you high yields. You can even use leverage in this case, and you just yield till you get the break point. So in this case, you will manage to stay in this range for pretty much the whole day, 24 hours. So in 24 hours, you would yield approximately, in these conditions, 0.6 to 0.7%. If you use 2 to 3 times the leverage, you make the math yourself, nearly 3% in pure yield, very, very simply. So I just wanted to check what kind of conditions we are seeing right now, and it's playing exactly as expected. The market is trending, it's highly volatile in one direction, so this is not suggesting any ranges for now, but we had multiple very good runs. This one was really nice run as well. Small range, and it's been in range for quite a while. Actually 1 day and 18 hours. So you were able to yield some juicy stuff. We had some beautiful ranges here as well. Some beautiful ranges here. We had a few momentarily, like a very short term. So these ones would actually leave you in, well, you would yield a bit, but definitely not too much. But once you catch one of these guys, then you make up for everything and even stay in range for a while. This was a pretty ugly. You've been yielding for about 10 hours or so, and then a massive break candle. In this case, you would be fully converted to Solanas, and Solana value would go down as well by quite a bit, to be honest. In this case, it would be additional 2.4% loss, impermanent loss, so to speak, but you have to exit the position. So I don't think that you would recover those 2.4% throughout these few hours of yielding. The volume was not the greatest. I think so. So this would be a net losing yield position, but then of course you can make up to all of it on the next ones. These things are not that common when you have a nice range and immediate massive break. Anyway, we're always improving all of these tools, making changes. So this is the market update. Hopefully it's going to be beneficial for you. I really enjoyed making this one, so I will try to make it more regularly. But as I said, we are working extremely hard. I mean, the amount of math we have on our whiteboards in the office is insane. But all of that stuff that we are building is because we need to use those tools ourselves. So we build what we use. So I will never show you anything that I'm not using myself. I'm not one of those influencers, blah, blah, blah. So all we build is for us and eventually for others as well. So we will never release a tool that is not complete or that is not beneficial. And because we are operating on a pretty high level in the financial markets, We need good tools. We don't need the generic ones. Oh, we have a bounce from this and that. We need an actually good tools that gives you an edge. We need to find the edge. So if we manage to do that, and if it fits our level, and we have a pretty high level for all of these tools, then you can trust that it will benefit you tremendously as well once those things are released. So anyway, thank you guys for watching. Thank you for listening. If you watched the full video, you are a legend. You have a very good attention span and you care about yourself, your position in the markets and the future. If you already skipped this video 40 minutes ago, well, what can I say? What can I say? Enjoy life, and that's it. It is now the last, no, I believe tomorrow is the last day of January. So the first month of the year, not the greatest, definitely volatile and volatile to the downside. But if you use protection methods, just like you use protection in life, if you know what I mean, you can have fun and stay safe. Okay, so thank you guys for watching once again, wishing you all the best, and I will see you as always on the next video.